My name is Percy Amalsadiwalla, Senior Vice President of the Institute of Internal Auditors, Mumbai chapter. Our world is changing at a rapid pace and it is moving towards ingenuity. And with this ingenuity, born are the greedy minds. The theme of the session is indeed pertinent in today's business environment. And we are fortunate to have an eminent panel of industry experts with over 100 years of collective experience to deliberate and share their perspectives. Before I introduce the panel, please allow me to share some housekeeping pointers. All the participants' audio is on mute. Please use the Q&A window appearing on your screen to type in any questions you may have for the panelists. These will be taken towards the end of our panel discussion. We will also have a few polls featured throughout the session and request you all to participate in these. The session is being recorded and we will be sharing the link with you for subsequent viewing. Now, without further ado, let me introduce our first panelist, Mr. Atul Bheda. Mr. Atul Bheda is a non-executive independent director appointed by the Government of India in Yes Bank Limited. He is a practicing chartered accountant since 33 years with a degree in law and information systems audit. He has been a member of the Central Council of the Institute of Chartered Accountants of India, ICAI, from 2007 to 2013. He has chaired various ICAI committees of Information Technology, Indirect Tax, Ethical Standards Board, and the Expert Advisory Committee. He has represented ICAI on committees of SEBI, RBI, IRDA, and XBRL International. He was a member of Accounting Standards Board, Corporate Laws and Corporate Governance Committee, Internal Audit Standards Board, Committee on Banking, Insurance and Pension, Auditing and Assurance Standards Board of ICAI. Mr. Bheda was also the chairman of Western India Regional Council of ICAI. Our next panelist for today is Mr. Farokh Subedar. Mr. Farokh Subedar is a chartered accountant and a company secretary. He has over 35 years of experience with Tata Sons and has held multiple senior level roles such as head of tax, CFO, company secretary, and at the time of retirement as its chief operating officer. Mr. Subedar is on the boards of various Tata Group companies and has been closely associated with Tata non-banking financial companies. He is the vice chairman of Tata Investment Corporation. He is currently on the board and an audit committee member in Tata Capital, Tata AIG General Insurance Company, Tata Asset Management Company, Tata Industries, and Tata Realty. And last but not the least, our third panelist is Mr. Robin Bannerjee. Mr. Robin Bannerjee is the Managing Director of Capri Hands India Limited. Previously, he has held senior leadership positions in several multinational global corporations. Hindustan Unilever as General Manager, ArcelorMittal Germany as Managing Director, Thomas Cook and SR Steel as Executive Director, Suzlon Energy as Group CFO and Member of Board. Mr. Bannerjee is a Chartered Accountant, Cost Accountant, Company Secretary, and MCOM. He is the recipient of several business awards, including Rotary International Award for Ethical Businessman of the Year, 2018-19. Mr. Bannerjee is the Chairman, Confederation of Indian Industry, Western India for Finance and Taxation Committee for 2021. He is a member of the Board of Studies for Independent Directors, Indian Institute of Corporate Affairs, Government of India. Robin has also authored 3 books on indirect taxation and recently authored 2 business non-fiction books, Cheats and How and Who Blunders and How. Before we now dive into the panel discussion, let us take the first poll question. Can I have the poll question, please? Are corporate fraud incidents on the rise? Yes, absolutely. No, there is any one of. So the results are out, and we have more than 50% of the responses say yes, the corporate fraud incidents are on the rise. That is in alignment with some results of Harvard Business Review, which also stated that organizational fraud incidents are on the rise. The percentage of those being reported to police, however, are on a declining trend. So now we move on to the first question to the panelists, and this will be to all the panelists. We can have Mr. Bheda starting with it, and then Mr. Subedar and Mr. Bannerjee continuing the thread. My first question is, extent has economic uncertainty due to COVID and other factors generated board level discussions on either introducing and or enhancing fraud risk monitoring? Mr. Bheda, over to you. Mr. Bheda, you are on mute.
Okay, am I audible now?
Yes, very much.
Please. Okay. Thank you so much, Percy. I think this is a very pertinent question in the current scenario. We saw the participants are also more than 50% saying that the frauds, etc., in the corporate frauds are increasing. Therefore, it becomes very important at the board level. There are a lot of thought process which has to go to see that how these things can be reduced, how the fraud risk can be identified at the appropriate time. And especially when we talk about COVID and other factors, I think now we have, all of us know there is new normal which we are talking about. In this new normal, naturally COVID is a pandemic, is a black swan event, which has generated a lot of board level discussion on the need for this robust fraud risk monitoring mechanism. This could be majorly, there could be included that how the things are changing. Today, if we see everything is going around nowadays, nothing personal is happening. Everything is going on internet, e-meetings. Today also, right now, we have webinars. So this is one of the area where the board level discussion have to happen. And for that, the important things which at the board level we have to increase or enhance the role of second line of defense, that is risk management. We have to really use how we can increase the use of machine learning, robotics from the generating of the fraud alerts can be made. Then thereafter, maybe we also require to discuss and see that how the internal audit function could be more efficient, it could be more effective, and most importantly, more adaptive in the changing circumstances. Maybe we have to use some very, very detailed analysis, maybe example like Benford law for the detection, etc. Also, what is important is use of very secure technology, maybe like biometrics, face reading, finger recognition. Also, the focus now for the fraud makers would be cyber attacks, maybe hacking, and maybe at the board level, we can think of having a separate information security unit which can focus on this particular aspects. And most importantly, maybe at the board level, we also have to think how do we educate all our stakeholders, maybe our customers, our internal staff, and everybody. I think these are the important things which the discussion has to start at the board level. Thank you, Percy.
And Mr. Subedar, over to you.
Sure. Hi, Percy. Hi, everyone. Yes, I think it's a serious concern. In the month of March, one woke up to the early days of working offline. One really didn't believe that it could be done. One was really old school guys like me were astounded that we could finalize accounts without ever visiting an office. But of course, there are huge levels of risk. One is concerned. Boards are concerned. Boards themselves got into having video conference meetings, which many of them had already started. But to be totally conducting them on a faceless manner was a concern. Mr. Bheda has touched upon various aspects, but I think even simpler aspects were, at least in the initial days, one was giving up certain controls. One was phoning one's bank. One found sending across email RTGS instructions or by fax, going back to the older era. I think these are the several of these areas one will have to be much more careful with. And one is fortunate one has not come across, at least in companies I'm connected with, any kind of serious mishaps happening. One has been suggesting to guiding one's CFOs that please be quicker in your reconciliations, be quicker in your traditional modes of checking. These are some of the areas which I thought I would touch upon.
Thank you. Mr. Bannerjee,
Yeah, hi.
your view.
Yeah, sure. As regards, I think the question is, what's the status of the board today with regard to the risk monitoring? I believe that, as you all know, that March 24th, the lockdown started in India, world across somewhere in the month of March, late February, lockdown started, and the pandemic hit the businesses very badly. So the first concern of the boards, I think for the first 3 to 4 months, was essentially to survive. It was a survival which predominated the management attention. Many companies, to my mind, more than 50% are still struggling. And for them, even today, survival precedes fraud risks. So that's the number one problem today. The management and the boards are struggling with survival. Number two issue, as it stands at various boards, is risks. The risks could be two types, or various risks. Of course, the broad two risks are the business risk. Will my business survive? Will I have further problems because of pandemic and lockdowns? And the second risk, of course, could there be a fraud? And I think at this juncture, the boards perhaps are more struggling to discuss survival than anything else. The third issue which the boards are grappling with today is debt. That how is the debt behaving? What's the responsibility of the liabilities of my company? What's the principal interest I have to pay? Should we go for restructuring? Restructuring is a bad word. If you go for restructuring, another 3 to 4 years, further plans of expansions will obviously put on hold. So as it stands to my mind, it is just 6 months we are inside the pandemic. The boards are still concerned about survival risks and debt, and of course cash management. And I'm not sure whether frauds, which of course we will discuss as we go along, has taken a predominance so far.
Mr. Bannerjee, for sharing your views. From a management perspective, yes, indeed, it's very essential and critical for the service. And if fraud or internal audit is asked on them. We now move on to our second question. Mr. Atul Bheda, what is the extent to which the changing regulation and legislation have changed the focus of this management in recent past? Too little too soon, or what is it? Everyone is young, since you be close associated with the Institute of Chartered Accountants of India.
I think as again, we have seen that a lot of increase in the fraud, and therefore the law legislation, in recent past, there has been significant increase in the fraud related instances in the corporates, which has actually forced government and several other regulators to bring significant changes in the regulation legislatures to make the prevention, detection, and reporting of the fraud risk in any organization, to be more transparent, to be more robust. So, as if we can look the recent changes to maybe CARO, Prevention of Corruption Act, maybe in Companies Act, SEBI, the changes have enhanced the emphasis on better corporate governance practices, where the expectations of our internal and external stakeholders from the organization has changed from maybe reactive to proactive approach. So if I go to say CARO 2020 changes, two important fraud relating reporting, which are some additional clauses. So first is that whether any report under section 143(12) of the Companies Act has been filed by the auditors in form ADT4 with the central government. This is relating to any frauds against the company, that the separate reporting has to be done. The second is whether the auditor has considered whistleblower complaints, if any, received during the year by the company. Therefore, the reporting requirements have been made a bit exhaustive, where even a whistleblower complaints also are brought under the reporting requirements. These are within other changes. This, according to me, are the two very, very important changes relating to fraud and risk relating to fraud. Similarly, if we see the amendment in Prevention of Corruption Amendment Act 2018 can also be considered as a positive development, where the definitions and the penalties of the offenders related to accepting an undue advantage, being a habitual offender and abetting an offense, have been expanded. These changes made the law more elaborative to have better coverage and stringent. However, despite bringing about much needed changes, the amended act has created additional hurdles for the investigation and the prosecution. Because as per the amendment, if at all I have to proceed to prosecute the official, the sanction from the appropriate government has to be taken before initiating. No doubt, the reason for that was to prevent the victimization of the honest officers. And the amendment seemingly strengthens the shield available to the official accused for the corruption. Also, the giver of the bribes, etc., have also taken into embed of this particular amendment. So that way, somewhere this frauds and risks which are there are tried to strengthen. Then if I go to SEBI, regulation, the Security Exchange Board of India has made the amendments in the listing obligation and disclosure requirement in 2018, and SEBI has accepted the propositions set by the committee constituted under the chairmanship of Sri Uday Kotak, which aims at making compliances and disclosures even more transparent. Considering these changes, it is difficult to say whether these changes are too little or too soon. But these changes are must and should bring a very, very positive change in the culture. The fraud risk is being managed till now in the organization. All these efforts are being made in the right direction and to save the interest of several stakeholders in the organization. And I believe that with all these changes are not stagnant. This is a continuous process, and this will keep on happening as and when we go forward. Thank you, Bas.
Yes, Robin, you want to say something?
Yes, just to supplement what Atul Bheda said, one singular change, one another change, which has made life perhaps difficult for the fraudsters is NFRA, NAFRA. NAFRA has made all of us more responsible in what we are signing. And because of this watchdog above us, I think we are not only more responsible, but also what we sign has become more believable. And that, to my mind, has also changed the canvas of the fraud profile of India for sure.
Percy, you're on mute.
Yeah. Thank you very much, Mr. Bannerjee, for chipping in. Participants, you all can please post any questions you all may have for the panelists in the Q&A window, which is on your right-hand side of the screen. We now move on to our next question. What role does IA perform in conducting a regular fraud risk assessment exercise to consider, identify, and prioritize fraud risks? I would like Mr. Subedar to answer this question.
I believe internal audit, when it reviews the internal financial controls, will look at the fraud risk assessment. And out here, I would put 4 factors. One is the factor of prevention, the fact that there is an internal audit, and if it is a strong internal audit, I think that will be a significant deterrence to fraud. Then, of course, no amount of prevention and no amount of fraud deterrence would totally prevent it happening. So that's the role of the internal auditor, where he will come with a detection. And once it is detected, then he may be asked to investigation also may be ascribed to him. And from the investigation, you would go into the adjudication, the disciplinary committee. And in all these areas, I would think the internal auditor would have a role to play in the fraud risk assessment of the company.
Thank you very much, Mr. Subedar. We will now have a small poll question In your view, who owns fraud risk management? Is it A, internal audit, B, chief risk officer, C, board and audit committee, D, senior management, which is CEO, CFO, none of the above, or all of the above? Please vote, all of you. Can you please compute the results? Interestingly, the answer to it, which everyone has probably gone ahead with, is all of the above. So the participants feel that everyone owns fraud risks. So it is not only one team, but it is a collective effort. We now move on to the next question. To what extent continuing economic uncertainty change the level of internal coverage of fraud risk, if at all? I would like Mr. Bannerjee to answer this question.
Yeah, hi. This pandemic, I think, has singularly changed the way internal audit has been looking at things. The most important area, and the reason why it has, is a cybercrime. The whole business management is now through cyber, is through internet, including the webinar which we are having today. In normal circumstances, maybe 6 months back, we wouldn't have even dreamt that this webinar is not physical. And today, each one of us, 350 of us, are on web. And what has happened, therefore, that the businesses, the services, the manufacturing, most of it is now being controlled by web. The payments are going through web. The invoices are going by web. And therefore, the cyber crime has enhanced, to my mind, 20 to 30 times, which is maybe 2,000%, 3,000%. And therefore, that's a huge area where each one of us, the internal auditors, the forensic auditors, have an important role to play. I'll give you a little example. Just about for the last 3-4 months, our organization is registered under several exporters in export websites. And last month, as to tell you, we have got 200 inquiries. Just for information, it's a real data. This month, last month means September, I'm talking about 200 export inquiries. You will not believe 197 of them are fake. And out of 197, about 145 of them were trying to hack and get the data, the email ID of my export manager. What they were trying to do is get the email ID of export manager, send a mail to our customer saying that please make the payment, I am so and so, posing as a supplier of the goods. Just imagine how the world has emerged. It's a real data. And if we, the internal auditing community, does not address it and wake up ourselves and stand up to the test what the business community is having, it will be too late. The world of internal audit, I think the pandemic has changed, has made such a change that the way we are handling internal audit has changed forever.
Well, absolutely, Mr. Bannerjee. No doubt, the rise in cyber fraud has increased tremendously with this pandemic, and it is here to stay. People are getting much more creative, and and it's only going to increase which management would need from the internal auditors, from the compliance team, from the legal, as an assurance that things are moving well. We now move on to our next question, which is to all my panelists. And the question is, do you consider your IA team to be adequately resourced to perform fraud investigations within the organization? Do they cover key investigation competencies in the areas of handling evidence, interview techniques, data analytics? We'd like to hear your views, starting with Mr. Subedar, then followed by Mr. Bheda and Mr. Bannerjee.
Sure. I suppose the answer is there's no one fit to all answer out here. Like for instance, the NBFCs and the HFCs, which are regulated by RBI, there's a requirement of a dedicated FRM team, which is specialized and distinct from the general internal audit team. There'll be a combination of various teams which would be used in the fraud. The COSOS team would be brought in, an outsourcing specialist, a specialized auditor, a certified fraud investigator. I think it would be an issue of enhancing the skill sets. One is the basic skill sets would be available. I spoke about prevention and detection, but once it gets into investigation, you may have to bring in external agencies or specialized agencies to come and supplement the skill sets which would be available within the organization. That would be my view on this question.
Over to you, Mr. Bheda.
Yes, so I think this is a very important thing here, because what we are talking about is fraud investigations. I think this is something absolutely, as you know, said by Farokh, that it is absolutely a different function into that. So the most important fact or most important thing in the change environment is that now we have to have in this investigation extracting the digital evidence, because as we are seeing, more and more transactions are being digital, and therefore the knowledge of availability and usage of the tools for extracting this digital evidence would be most important quality. Apart from maybe forensic reviews or maintaining chain of evidence, I think that is there, because what we are talking about investigation means we know that this particular results would be used at the time of prosecution, and this will be used as evidence, and therefore we should have a proper skill set of conducting interviews and try to see that maybe we have a proper evidence, and for that maybe a specialized training. What was told about qualified staff like certified fraud examiners would be very, very important. Also, the team needs a specific competencies for conducting the investigation, which include understanding of the fraud triangle, like opportunity, rationalization, pressure. Also, understanding of the fraud tree, like why this corruption, asset misappropriation, your financial statement fraud. So I think this all put together would make a proper team, and the ingredients would change depending on circumstances to circumstances. Thank you.
Thank you very much.
My take on this, whether today the internal audit is adequately resourced on fraud investigation, unfortunately, my one word answer is no. We are still not ready and fully prepared. Please understand, the fraudsters are more capable and more intelligent than even we. They are at least few light years ahead of us. And therefore, unless we are ahead of their game, we will not be able to instill confidence in the industry. And therefore, it is very important that concept of forensic audit and all others, what we know about catching the odd fraudsters in the current world, we need to learn the tricks very fast. Plus, the internal audit group as a whole, we need to do specific research to understand as to how the fraudsters could be thinking tomorrow. As of now, I think we are lagging behind the game. We are still not ready to fight the malady.
Well, very, very candid response, Mr. Bannerjee. Thank you very much. Well, I agree with you. Internal audit's forte is not to conduct investigations. And I think this is coming out very well from all the panelists. And we need special team to conduct forensic investigations for the organizations. So we move on to our next question, which is again to you, Mr. Bannerjee. What is your assessment of internal audit's use of data analytics or data mining techniques in each of the areas of fraud prevention, detection, and investigation?
This follows from my earlier answer to the question that we are still not ready. We are still not ready because we are still not ready with the tools. I think we are still not ready with the understanding of artificial intelligence. Because machine learning and artificial intelligence, unless we are able to crack it, how are we going to know how the fraudsters are behaving? As I said again earlier, that the growth on frauds have now been more in the cyber domain than the physical domain. The cashier running away with the money and the purchase manager taking bribes, this will continue. And that was there for hundreds of years. It will be there for next hundreds of years. But what has changed is the use of cyber. And therefore, the learning is inside the machine. The learning is inside the artificial intelligence. The learning is inside the understanding of the big data. And all three of this, whether it's artificial intelligence or big data or analytics, we are still not up to the mark. Each one of us have to be specialists in this field. Believe me, only when each one of us becomes specialists, we will be able to make a huge contribution to the industry. The industry and the businesses are looking up to us to crack this whole malady and this whole, I would say, demon which has come onto this mankind. They are looking unto us. Who else than internal auditors who can crack this? No one else. There is no. We have no other competition. We must learn it. We have to do it. You have to learn how machine is thinking, how intelligent, I would say, signals which are coming out from all the data. The data gives us signals. And if we can read those signals, we'll be able to catch the fraudsters. And therefore, it is time. We must learn the tricks. And the time is running out. We need to be very fast and be ahead of the game. As I said, the fraudsters are more cunning and more intelligent than most of us.
About it, Mr. Bannerjee, that all of us have mining techniques and data analytics, the benefit to see and analyze and then take proactive steps to prevent fraud. Our next question is: have we and will the opportunities and fraud risk data organization?
Sorry, do I take it?
Yes.
Sir, yeah. Sorry, my the bandwidth is getting a bit slow. I think it's a combination of various factors and maybe all of them. There will be many more actually. One would be collusion between employees and third parties, disgruntled employees, ineffective managerial or internal controls in an organization, external pressures, of course, which should be there on employees. Also, the culture of the organization, ethical controls are lacking. Code of conducts are not taken seriously by management. There's absence of zero tolerance in various areas. The messaging has gone out. I can get away with it. A weak kind of a rap on the knuckles was given to X, so therefore why not I try out something much more. I think these would be the areas of primarily zero tolerance, a very high level of code of conduct enforcement would be areas which would possibly deter people. Of course, deterrence is one part of the game, as Mr. Bannerjee mentioned. The crooksters will get smarter and smarter. And it's a game of catch up which will have to be played all the time.
Thank you, Mr. Subedar, for your thoughts on this, and also bringing out the point that tone at the top is certainly very important in preventing fraud. Small poll question now. Can we have it on the screen, please? Has your organization done a formal fraud risk assessment? Yes, no. It has been done as part of internal audit. Not sure. Post your votes. So roughly 52% have said yes in some form or the other, and half of them have said that it has been done as part of internal audit. Well, the report to the nations 2020 done by ACFE Global clearly identifies fraud risk assessment as an important anti-fraud control and has concluded that 33% of the fraud loss can be curtailed if a formal fraud risk assessment is in place in the organization. So this is the importance of having risk assessments regularly being done by either the risk team or the internal audit, or in some form or the other by any team. Now move on to our next question. Are there any differences in the management's approach towards fraud prevention and detection between a professionally managed company and a promoter-driven company? This question I would like all the panelists to answer, and I would start with Mr. Bannerjee, followed by Mr. Bheda and Mr. Subedar.
Are there any difference between the management approach of fraud management between professionally managed companies and promoter-driven companies? The answer, unfortunately, is yes. There is a difference. Now, that's bad news. There shouldn't be. But there are a lot of dichotomies. The dichotomies are, it's an answer I've given upfront, so let me tell you the dichotomies. There was a huge fraud in PNB Bank, 14,000 crores. Now, was it a promoter-driven or professionally driven? We'll leave it to you guys to understand what it is to be driven. We all know there is a problem in Yes Bank. Again, thousands of crores. It is perhaps both driven. Professional managers were taking a view, and perhaps the promoter was taking the final view. Now the promoter-driven examples. Satyam, it all started. Companies Act 2013 started from Satyam fraud, promoter-driven. Kingfisher, which is changing the world of fraud for India forever, promoter-driven. DHFL, which has made a cooperative bank bankrupt, taken 50, 60,000 people to almost bankruptcies, promoter-driven. One of the largest frauds in India, 92,000 crore balance sheet size, ILFS, promoter driven or professionally driven? In my view, both. So while there are questions on both sides, but when it is professionally driven, there is at least a desire not to do a fraud, because the money does not go to him or her in their bank account, because the money goes to the company's account. Whereas a professionally driven and promoter driven company, many of the money does go to the promoters in some form or other. So as an internal audit discussion, this needs obviously a very frank discussion. But yes, there would be difficulties in both the type of organizations. Big frauds have taken, as I just told you, perhaps the biggest, latest is 14,000 crores PNB Bank, which is the Nirav Modi fraud. The fraudster was an individual promoter-driven company, which is Nirav Modi, but the fraud took place on a bank, which to my mind was professionally managed. How it was not unraveled is a very difficult thing to say, but the fact of the matter is, one, the frauds can take place in both. However, the promoter-driven companies perhaps will have the degree of difficulty a little more because the structuring could be a little more done cleverly. And three, as internal auditors, if we are internal auditors, whether it is professionally driven or promoter-driven, we have to be as much careful because you never know from where the snake is biting us.
Thank you. Mr. Bheda.
Thank you, Percy. The question here is that difference in the management's approach towards the internal auditor's role in fraud prevention and detection between professionally managed company and promoter-driven company. I would not like to go into the names or the detailing of that. I'll just try to say that what ideally should have been and what we should do about it. Maybe that first is that ideally speaking, there should be no difference. As long as top management is aligned with the need for the fraud prevention and detection and willing to deploy resources towards the same. The board has the most important role in setting the right tone at the top, which Percy you said in the previous question, and I 100% endorse that view. First kinds of the frauds are done with involvement of the top management. Mr. Robin gave various examples of that. And the internal audit function has to be independent and robust to review the work of top management. Coming to our basic question, whether there is a difference in prevention and detection, practically, yes, there is the difference. Ideally, it should not have been the difference. So that is the fact of the case. We are not going into the detailing part of it, but that is my, my view on the question which is put to. Thank you.
Thank you.
Shall I? Yeah.
Yes, please.
I too wouldn't really put a difference between a professionally managed and a promoter-driven company. I think it's the intent out here. Even if it is a professionally managed company, as Mr. Atul Bheda mentioned, if the intent is to carry out the fraud, the top management, who are the professionals, will also carry it out. And the same is the issue with the promoter-driven. It's the culture which will be most important. It is the transparency which is permitted, the authority which is given to the internal auditor to go into areas irrespective of what is the level of the person he is auditing. So it's finally empowerment of the internal auditor. I do not believe the issues are different from a promoter to a example would be a promoter who could be doing it. In another case, it could be the professional who is a managing director of the company could himself be involved in the fraud. To what possibly, I don't know. There may be situations where you may have more benign, more protective promoters who, at possibly at some lower level, if there have been fraud, may kind of was say, reprimand him and let him go. his family would suffer, his career will suffer. While in a professional organization, I think that would be less of a possibility, because you'll just go by the rule book and not get into the humane kind of conditions. I'm putting it in a positive manner for the professional management, because the man could believe that he has a right to take the decision in a way that is correct for all stakeholders, including the what he believes is the one-time fraudster.
So much. Thank you all the panelists for your candid views on this. My next question to Mr. Bheda is, what most help IA to be more effective in providing assurance over fraud risk in the organization?
Okay, so there could be various things which could be there, which would be more effective in providing assurance over the fraud risk. It could be like whistleblowing reporting, increased use of data analytics, more resources and skills, more robust fraud risk assessment, fraud awareness and training for all the staff. But most importantly, according to me, which earlier also I have stated, is the right tone at the top. I think that is the most important thing. The involvement of the top in the discussion, maybe at the board level, maybe at the top management level, on the fraud risk on a very, very regular basis, and keep themselves with the pace at which the changes are happening. See, as we have discussed earlier, the fraudsters are really very, very intelligent, and they are very fast moving brains. So that fraud risk is also actually always ahead, or they are ahead of thinking of the internal audit teams. So therefore, the right tone at the top would really be of a great importance. Also, the existence and the review of this continuous stress testing for the various scenarios would also help regularly to see that this risk are reduced, and maybe all others I said in at different time, different percentage, or different things could be used, as I said, maybe like whistleblowing, increased use of data analysis, more resources and skill, more robust fraud risk assessment, fraud awareness training for all the staff. So that could be supplemented to the right tone at the top. Thank you.
Thank you so much. Can we have the final poll question, please? Has your organization used data analytics as a fraud detection / fraud prevention tool? Audience, please post your answers. Well, 50% of the organizations say that they have used detections to fraud prevention mechanisms. So which is a good sign. And although it's only 50%, it should be rather, in our view, or in management's view, it should be 100%. So now we move on to our next question. Mr. Robin Bannerjee can answer this one. With enhanced regulations, oversights by the board, audit committees, greater vigilance by the authorities, is there a possibility of being averted?
I believe major scams can never be avoided. Never. Whatever we will do, these people will always be ahead of the game. Our job is to reduce, and can we eliminate? We have not been able to eliminate for hundreds of years, and I don't think we will. But that's the truth. Many of us may not agree, but that's my understanding as of today, sitting in September 2020. So having said that, essentially speaking, there are two types of frauds. One is the fraud, which is the internal control weakness. As I said, the purchase manager takes bribe, or he buys things at a higher price, or the cashier runs away with the money, or the storekeeper sells scrap in the night and takes money home. But these are internal control processes which can be largely mitigated, stopped, and perhaps prevented. But when it comes to structured frauds, which the board or the top management or the entrepreneur has structured, can internal audit prevent it? Whether we'll be able to ask questions, whether we'll be able to challenge the powers that be, that why this is happening. Today morning, a newspaper item came that Cox and Kings, which has lost about 2,000 crores, Mr. Ajit Kerkar, who has been the CEO, has blamed the CFO, saying the CFO and the auditors and the internal auditor, today's Cox and Kings news item, or maybe yesterday's, they have run away with 2,000 crore. Now, is the CEO or the promoter passing on to the professional managers, or professional managers indeed did that? Now, this was a structured fraud. Because of that, Cox and King, perhaps the second best name in the travel industry, has got bust. So, irrespective of the legal framework, which may keep coming in any country, my dear friends, that will not prevent frauds, neither will help us in assuring the management everything is fine. Of course, as my co-panelists have said, that after all, it is the ecosystem. It is the structure of the management, what he wants to do. If the entrepreneur wants to run a tight ship, a good ship, an ethical organization, then it is for us, you need to detect everything. If the entrepreneur or the board does not want to do so, it will be very difficult to detect. Irrespective of that, legal system or no legal system, frauds will keep coming, and therefore there will always be jobs for you and me, my dear friends.
Thank you so much. We now move on to our next question to Mr. Bheda regarding what are his views or thoughts, expectations on the upcoming forensic accounting and investigation standards developed by the ICAI. What does it mean for the internal auditor conducting investigations, and would these need to be adopted also by non-chartered accountants? Sir, if you could put some light on this.
Okay, I think this is, I have to begin with, I think this is one of an excellent step in the right direction by the Institute of Chartered Accountants of India. Not that because I'm a former Central Council member connected with the Institute for so many years in different capacities, but even as a layman, even as an outsider, I think, yes, I think this is an excellent step because, in my opinion, India is going to be the first country to set out the standards for the forensic accounting and investigation. So this step, ICI will strengthen the professional practice of the forensic accounting and investigations, and the very basics, or besides what is required is the process which has to be followed for the standards. And I think that is something great for the institute, because it is being setting up of standard is not new things for the institute. There is a very standard process. You talk about accounting standards, you talk about auditing standards, you talk about internal auditing standards, various standards, the institute is, trying to have on a very, very regular basis. A very, 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 solid process is there. That is, first a draft is prepared internally with the help of experts. A public exposure is being made to invite the suggestion, objections on the standards. Again, that internal discussions with the committee and maybe the board, which is there specifically for this particular standards, whatever standards they are. then finally the standards are coming out. So that is a very great process which is being done, and I'm sure all the regulators would be benefited hugely, including all the professionals. Leave about the chartered accountants, even the non-chartered accountants who are doing this. It would be a great, a guide for all of us, because there will be a process standardization across the board, and then collection of the evidence based on the process, which may be subject to very high level of scrutiny in the court of law. This will also be used by all the professional assignments relating to engagement of forensic accounting and investigation. And as forensic account auditor can identify fund diversion, misutilization of the funds or other related activities related to corporate. These standards will be of a great help to the public interest entities. Yes, there are various processes which will be followed. Like there will be series. Like they have identified some 6 series for this. That is, first will be standard on the key concept, standard on practice management, standard on execution of assignments relating to fraud, accounting and investigation, standards on specified areas, and last is standards on the quality control. So a very, very systematic approach has been, decided that it will be followed. And then, the basic, code of ethics would also be there, like, independence, neutrality, integrity, objectivity, due professional care, confidentiality, skills and competence. So all these things put together, I think it will be really, I would say, a path breaking and a new things as far as this fraud detection is concerned, investigation is concerned. As far as 2 things about whether internal auditors who are not chartered accountants, that is those who are whether it will be applicable to them or how it will be beneficial to them. I think as far as the chartered accountants are concerned, the way things have happened for various standards, gradually over a period of time, the institute will make first it as a recommendatory, and gradually it will be mandatory for the members. For the outsiders, naturally, institute cannot, institute is not having jurisdiction for controlling and managing, because they are regulators for the members and not the regulators for the non-members. But at least they will always want to promote and see how these standards would overall upgrade the quality of the investigations that would be done. And that would be really of a great utility for all the professionals who are undertaking these forensic assignments, whether CA or non-CA. I think this is a very, very welcome step in my opinion. Thank you, Percy.
Thank you very much, Mr. Bheda, for sharing your thoughts on the FAIS. Last question to Mr. Subedar is, what are your views, expectations about organizations following a legal route, be it civil, be it criminal, and any other response mechanism like publicly releasing statements against the perpetrator, which is based on the investigation results? What are your views, sir?
It's a tough one to come up with a yes or a no, in the sense go public or not go public. I suppose there'll be a variety of factors which would determine it. We spoke a lot about the tone at the top. If it is a thoroughly professionally run, no emotions involved, every case, the textbook would say that every case you should file a police complaint, you should follow it up, what a police complaint, civil complaint, criminal complaint, depending on whatever the lawyers advise. There will be, of course, bad publicity will be at the back of the minds of the board. Should we do it? Should we not do it? Should we have a quiet settlement? Again, I think the promoter versus professional reference, which was made in a different context, may come to play out here also. It depends also on the nature of the fraud. If as one is, where the promoter himself is involved in it. Now, who is going to take this decision till the real problem blows out? I mean, many of these cases we spoke about, I suppose these were simmering for many years within the organization. People were talking about it at the water cooler and the coffee machine, but obviously, who will bell the cat? Who will take the action? So I'm afraid there's no yes and no answer to this. Theoretically, yes, everything should get reported. Just yesterday, SEBI has come out with some new guideline that the moment you appoint a forensic auditor investigation, then it should be made public. I suppose that will set the trend. I mean, regulations will possibly help to give these answers. Otherwise, it will be on a case-to-case basis. The answer would be determined.
We are coming towards the end of our panel discussion, and thank you, panelists, for sharing your open views on some of the issues surrounding good corporate governance. It has been an interesting session. May I now request Suprabhat, Managing Director, Protiviti Forensic Services, to take up the questions from our panelists and address it to the panelists.
Thanks, Percy. Thanks for moderating a very interesting session. We've lots and lots of questions coming in, and we'll pick up some interesting ones and share it with the panelists for their view. I think the first one is for you, Mr. Subedar. In relationship to the number of corporate frauds that we are seeing, are you seeing a change in the governance environment across various companies? Are organizations getting more focused on corporate governance matters than they were, say, maybe 15 years back, 20 years back?
I would say definitely yes. The answer definitely would be yes. I think 15 years back, or even much shorter period of time, organizations would have been groping on what is to be done, whom should I talk to, where do I get the skill sets. We've come a long way since then. I think the skill sets are being developed in-house within large organizations, or in other cases, at least people know where to go to get those skill sets. All the big fours have their forensic departments. Everyone is geared up to do that.
Sure. So you're clearly seeing the corporate governance environment changing in response to the number of corporate frauds that have been happening over the last many years. Yeah. Great.
You're ready to deal with it.
Yeah, much more ready to deal with than before. Yeah.
You're hoping it's not happened to you.
Right. Okay, so next question to Mr. Bannerjee. I think you addressed this earlier during the session, so it's somewhat of a variation on the same theme. Do you really feel that if the promoters, the senior management are involved in an act of fraud, will it ever get detected by whether it's an empowered internal audit, whether it's a external auditor, whether it is someone else who has got that responsibility? Do you think it will ever, a fraud like that will ever get detected?
Many frauds do get detected. We talked about PNB Nirav Modi fraud. It got detected. It got detected after 8 years. Mr. Kingfisher ran away with the money. It got detected after 7 years when we found that he left the country and when he failed to pay the bankers. So there are issues, or there are certain happenings which perhaps lead to detection of the fraud. Satyam fraud was never detected. He himself squeaked. Ramalinga Raju said that, please help me, I have cheated. I had only 50 votes in my bank account and I showed it at 9,000 past 8 years. So there are various ways in which a fraud gets detected. 40% of legal fraud is detected through whistleblowing system. And therefore, if an ecosystem, we the internal auditors create an ecosystem around encouraging a whistleblowing system, maybe 2/3 of the fraud, 4 of 10 or 2% of the fraud will get detected. So say that no fraud get detected, that's not true. Otherwise, we wouldn't have got to know anything and we wouldn't have sitting today. Question is how much portion of the frauds do get detected? Nobody knows the answer. Perhaps majority of the frauds do not ever get detected. That's my view.
Right. That's very interesting. So majority don't get detected, according to you, Mr. Bannerjee. Right. Very interesting. Okay. Next question. I will pose this to Mr. Bheda, since this is from related to the banking and financial services sector. So the question is, should forensic audit be made almost mandatory, compulsory in a very sensitive industry like the financial services sector? Should all borrowings, all the activities compulsorily go through a forensic audit process, almost like an ongoing forensic audit process?
I think, see, there is really a great difference between our internal audit functions, which we are doing today, and the forensic audit which has to be done. So our internal audit function should be made in such a way that they really, they can really find out the risk wherever they want. That is, there is a fraud, maybe a special team can be there, and forensic audit would be the team that would be. But for each and every transaction, if we want to go for a forensic audit, first of all, the cost-wise, it will be very difficult. Time-wise, also, it will be very, very difficult to see, because if I see the lakhs and lakhs transactions happening in this industry, if I say that all 100% have to be forensic audited, I think that is absolutely practically not feasible as far as time is concerned and money is concerned. And therefore, not all the entries or all the transactions can be taken into that bracket. But there could be various, parameters where you can decide that if this parameter is there, we have to go for the forensic audit. And I'm sure many of the financial institutions do follow that. And so the very simple answer is no, not for all the transactions. But yes, selectively, different parameters can be applicable and accordingly things can be. Thank you.
Sure, Mr. Bheda. And you would say that some of that could be done in a proactive manner as well, right? Before something has been reported as a fraud, probably these kind of criteria that you're talking of, we could look at applying them in probably a proactive manner.
Absolutely, and I think that is what is very much required. That you have your parameters based in such a way that your assessment of the risk is made and the fraud can be detected much before you are actually the fraud is happening or it has happened, and the further actions can be taken.
Great.
So Prabhat, if I may interrupt, very coincidentally, the Financial Times of London's headline just now is "Whistleblower warned EY of fraud at Wirecard 4 years before collapse." I think Robin mentioned whistleblower, and just around that point of time, I was a bit distracted with the newspaper headline.
That's right. Yeah.
These telltale signs are there. They need to be picked up, and that's possibly what the internal auditor needs to do.
Yeah, and I think, Mr. Subedar, like we were discussing in an earlier occasion, how much regulation should we really have? What is too much and what is too little is, I think, something that we are constantly grappling with, when it comes to investigation versus internal audit versus monitoring. So I think a critical issue. So I think we've we're almost, on, as far as the time is concerned, we're almost there. I think we can just do one more question, and I'll probably address it to all three of you, starting probably with you, Mr. Subedar. What are the top 3 fraud risks, in your opinion, as someone who is with the board? What are the top 3 risks that you would want the management to look out for?
I think employee collusion, statements which have been presented to the board, the higher the level, I think, the greater the concern, and that's where it's become so much more important to empower the internal auditor. He should be a person of gravitas, with the audit committee chair, backing him up whenever he has issues. All right.
Yeah. Great. And Mr. Bannerjee, in your view, top 3 fraud risks that you would recommend the management always to look out for?
I will make top 3 into top 2, just to make the life
Sure.
simpler. The first one, as internal auditors to look out for, is a structured fraud.
Right.
There is a structured fraud going around, which could be structured fortunately, by the top team. So, as much as possible to unravel that. But it is very easy to say that we need to unravel, but it is management structure. I'm sure most of us do not even feel it. But that's one which will always bother us. The second one is receivables and inventory flow. Because based on that, working capital loans are taken, bank debts are taken, people are signing it, top management signs it. It is possible that the receivables and stocks do not exist to the extent which we are. To my mind, the top 2, which all of us need to look at. I wouldn't go for the third one, which usually that the purchase department, which is involved, or the sales department, they either sell it at a higher price, the money doesn't come to the company, or purchase department buys at a higher price, and of course, some portion goes to the purchase department. But these are more control weaknesses than anything else.
Thanks, Mr. Bannerjee. That was a great perspective to have. And Mr. Bheda, your views on the same top 3 fraud risks, more so probably from a banking, financial services kind of domain? Mr. Bheda, I think you're on mute.
Satish, you'll have to unmute him, Satish.
Yeah, I think, am I audible now?
Yes, we can hear you, Mr. Bheda.
So, right. So the topmost risk, in my opinion, when you talk about finance and banking, is today, if we see, most of our banking and financial activities are online. So this particular cyber attacks, hacking, I think this is the topmost risk which in this industry is facing, and this has been increasing day after day, and especially after this COVID pandemic. I think this risk is really a very big risk. So that is risk, most important risk, I think, which has to be properly addressed. Maybe I would then try to see the risk, maybe again connected to this, is the alerts on the customer profile, mismatch. Because nowadays, there are a lot of people, fraudsters, who try to see that they really take out the details of customers and try to portray that they are the customers, and they try to use this customer data. As one of the examples who are given, that they were just watching the emails of that particular client, and then suddenly one day they said, tell the purchaser that kindly transfer our money not to this account and to that account. I think this is the second very important risk where we would really find it difficult. And the third risk is maybe the internal, that is having the role of risk management. I think that has to be defined, redefined. So we have to unlearn, relearn, and again we have to learn and unlearn. I think this is a continuous process. So these are the 3 topmost risks in this industry. Thank you.
Great. Thank you so much, Mr. Bheda. That's very interesting about this continuous process of learning, relearning, and keep changing our perspective. I think, like Mr. Bannerjee said, the fraudsters are always ahead in the game. So it's equally important for all of us to also keep doing that continuous sort of learning and education, so that we can keep beating them all the time. Great. So I think this probably brings us to the end of the session. I'm sure today's session has helped us all gain much deeper insights on the subject and also provided good food for thought, things that we can go back to our workplaces and consider implementing, consider putting into practice. So thank you very much, panelists, for sharing some wonderful thoughts, some great ideas, and providing some great perspective on the subject. I'd like to thank the panelists on behalf of the Institute of Internal Auditors and Protiviti for taking time out to come onto this panel, share their thoughts, and have a very, very good discussion. Also would like to thank each and every member of the audience for taking time out to be part of this session, posing some wonderful questions. I'm sure there's been some great learning for all of us. Last but not the least, Percy, thank you for anchoring the panel and sort of guiding us through this wonderful panel discussion. Thanks very much. Thank you all.
Thank you.
Thank you.
Thank you. Thank you all. Thank you so much.